What is happening, crypto fam? Buckle up because the market is moving at warp speed and you need to know what's going down. We've got seismic shifts, groundbreaking strategies, and predictions that will blow your mind. From major price movements that have everyone talking to innovative security measures and bold forecasts for the future, this is your essential download. You're about to get the inside scoop on the stories that matter most, so don't go anywhere. Get ready for a high-octane dive into the news that's shaping our world. First up is Bitcoin's recent rally hitting a snag. We're seeing a significant drop that has analysts sounding the alarm. Is this the end of the bull run as we know it, or just a temporary pause? We've got the inside track on what's really going on with the price action that has the entire market on the edge of its seat. Then, we're heading to El Salvador for a look at their bold new strategy to protect their Bitcoin holdings. They're not just thinking about today's security, but also preparing for the future, even anticipating advancements in quantum computing. What does this mean for how nations might safeguard their digital assets? And get this, we're talking about a potential $1 million Bitcoin price target. An influential figure is making some incredibly bold claims about Bitcoin's future value, citing limited supply and growing utility. Could we be witnessing the early stages of a massive surge? Stick around for all the details, and make sure to hit that like, subscribe, and notification bell so you never miss an update. The $90K Bitcoin meltdown. Analyst rings alarm as whales flee. Bitcoin's impressive rally appears to have encountered a significant roadblock, with the cryptocurrency experiencing a notable downturn this week. The asset has shed over 6% of its value, currently trading in the vicinity of $108,500. This sharp decline has ignited widespread discussion across the market, prompting the critical question: has the bull run reached its zenith? Adding to the market's unease, a prominent analyst has issued a stark warning, presenting a grim forecast that suggests a potential meltdown could be on the horizon. The recent price action has seen Bitcoin falter after a period of strong upward momentum. The drop from its recent highs has erased a significant portion of the gains, leaving many investors questioning the sustainability of the current market cycle. The sentiment on the street is one of caution, with many looking for clear indicators of whether this is a healthy correction or the beginning of a more prolonged downturn. The term whales, referring to entities holding large amounts of Bitcoin, are reportedly moving their assets, a move often interpreted as a signal of impending price action, whether upward or downward. The reasons behind this alleged exodus are varied, ranging from profit-taking to hedging against anticipated volatility. However, the sheer scale of the movement, if accurate, could have a substantial impact on market stability. Analysts are dissecting every available metric to understand the underlying causes of this pullback. Factors such as shifting macroeconomic conditions, regulatory developments, and even on-chain data are being scrutinized. The narrative of a looming meltdown is fueled by historical patterns where sharp declines followed periods of rapid ascent. The concern is that if key support levels are breached, it could trigger a cascade of sell-offs, leading to substantial losses for those who entered the market at higher price points. The market is particularly sensitive to any indication that the narrative of continuous growth might be faltering. The coming days are crucial as traders and investors watch closely to see if Bitcoin can regain its footing and resume its upward trajectory, or if the current trendline break signals a more serious correction ahead. The market is holding its breath, awaiting confirmation of the next major move. But is this a sign of weakness or a strategic shakeout? We'll break down the indicators that matter most. Next, we're diving into how El Salvador is future-proofing its Bitcoin reserves against even the most advanced threats. Has El Salvador made its Bitcoin holdings quantum-proof? El Salvador has recently implemented a significant overhaul of its national Bitcoin storage strategy, a move designed to bolster current security measures and proactively address potential technological risks that may arise in the future. This proactive stance is particularly noteworthy given the emerging field of quantum computing. In an official announcement made on Friday, the nation's Bitcoin office revealed that the entirety of the country's Bitcoin reserve has been systematically migrated from a single wallet into a multitude of new, separate wallets. A key parameter of this new architecture is a strict limit. Each individual wallet will now hold a maximum of 500 Bitcoin. This strategic cap is intended to significantly mitigate the potential damage or loss should any single wallet be compromised. Officials have characterized this restructuring as being in line with established industry best practices while simultaneously preparing for potential advancements in quantum computing. The concern surrounding quantum computing stems from the theoretical possibility that these advanced machines could, in the future, break the complex cryptographic mathematics that currently secures Bitcoin, as well as other vital digital systems such as online banking, email, and general internet communications. The primary vulnerability, according to experts, arises during the transaction process. To move Bitcoin, the cryptographic signature that protects the funds must be broadcast on the blockchain. While this process is considered secure with current technology, a sufficiently powerful future quantum computer could potentially exploit this revealed information. By analyzing the signature, such a machine might be able to calculate the private key associated with the wallet, thereby gaining unauthorized access to and control over the funds before the transaction is finalized. El Salvador's strategy of distributing its holdings across numerous wallets, most of which remain unspent and thus have their private keys securely held, minimizes the risk of having too many exposed keys accessible simultaneously. This approach ensures that the majority of the nation's reserve remains protected by cryptographic methods that are currently unassailable. Furthermore, the wallet size limitation means that even in the event of a breach, the entire national reserve would not be at risk, but rather only the limited amount within a single compromised wallet. The government also acknowledged that its previous method of consolidating all holdings into a single address, primarily for the sake of transparency, introduced an unnecessary security exposure. This repeatedly used address meant that its associated keys were practically always visible on the blockchain. The new model, conversely, allows for public tracking of the National Reserve across its multiple wallets via a dedicated dashboard, thereby maintaining accountability and transparency without the inherent risks of address reuse. This strategic shift has garnered praise from prominent figures in the Bitcoin community. Adam Back, a seasoned Bitcoin pioneer and CEO of Blockstream, lauded the move, stating that segmenting funds into numerous unspent transaction outputs, UTXOs, rather than consolidating them into a single, frequently used address is a generally good practice. Back, whose work on Hashcash inspired Bitcoin's proof-of-work mechanism, emphasized the security and privacy benefits aligned with long-standing Bitcoin best practices, even without directly commenting on the quantum computing aspect. While most researchers estimate that quantum computers capable of threatening Bitcoin are still at least a decade away, and the network itself could potentially implement new cryptographic protections in the future, El Salvador is choosing to act preemptively. By integrating transparency with a more robust and resilient storage model, the country is positioning itself as a pioneering test case for how sovereign nations might manage their Bitcoin reserves in an evolving technological landscape, potentially offering a blueprint for others to emulate. It's a fascinating approach to digital asset security, but what does it mean for the broader market? Next, we're analyzing whether Bitcoin's recent price dip is a temporary blip or the start of a serious bear market. Bitcoin's trendline break, bear market start, or smart investor setup. Bitcoin has recently breached a critical multi-year support trendline, a technical development that has sent ripples of concern through the market, fueling fears of an impending bear market. Following its ascent to a record high of $124,500, the cryptocurrency has experienced a decline of over 13.75%, falling decisively below its long-established upward trajectory. This breakdown below a key technical level has heightened anxieties among investors, who are now contemplating the possibility of a more significant market correction. Historical data provides a cautionary tale, as past instances of Bitcoin breaking below similar multi-year support trendlines have often preceded substantial price depreciations. Specifically, the trendline breaches observed in 2013, 2017, and 2021 were were followed by market downturns exceeding 70% in each cycle. This historical precedent is now leading many to speculate whether the current price action is a prelude to a similar drastic decline. Market participants are closely monitoring the Relative Strength Index, RSI, for Bitcoin to see if it, too, breaks below its own trendline. A simultaneous breakdown in both price and RSI has historically been a strong indicator of the onset of more severe bearish phases. Should this occur, analysts suggest Bitcoin could potentially retrace towards the 50-week exponential moving average, 52WEMA, which hovers around $80,000 by the end of 2025. This level has historically served as a significant support floor during previous correction cycles. However, not all market commentators are sounding the alarm for a bear market. Some analysts propose that the current price movement could represent a classic fake-out scenario, a temporary dip designed to shake out less committed investors before a robust recovery. Analyst BitBull, for instance, suggests that even a brief dip below the $100,000 mark would be consistent with Bitcoin's historical tendency to purge weaker hands from the market prior to resuming its upward trend. This perspective implies that such breaches of critical support levels are often followed by significant rebounds rather than sustained downward pressure. Further bolstering the case against an immediate bear market are certain technical indicators that suggest Bitcoin may not have yet reached its cyclical peak. The Pi cycle top indicator, which is based on the convergence of the 111-day simple moving average, 111 SMA, and twice the 350-day simple moving average, 350 SMA x2, has not yet issued its sell signal. This particular model has historically pinpointed major market tops in 2013, 2017, and 2021. The absence of this signal suggests that Bitcoin might still have considerable room for growth before reaching a definitive peak. Analyst Superbro has even projected a potential target of $280,000 for Bitcoin, viewing the current price action as a mere temporary setback. Conversely, other market observers point to signs of underlying weakness. Bitcoin has struggled to maintain its position above key resistance levels, such as $113,000, and technical indicators like the Moving Average Convergence Divergence, MACD, and RSI are trending into bearish territory. A failure to overcome these resistance levels could precipitate further declines, potentially pushing Bitcoin towards the $108,500 to $106,500 range. Immediate support levels to monitor are $110,750 and $109,500. A decisive move below $108,500 could signal a more substantial correction. The broader cryptocurrency market is also reflecting this uncertainty. Ethereum, the second largest cryptocurrency, has broken below its August uptrend, raising concerns about a potential fakeout or the start of an extended accumulation phase. Ethereum's price has slipped below crucial support levels, with $4,000 now acting as major support. A continued downtrend could see ETH testing $3,500 or even $3,000, representing a potential 30% to 40% correction. The performance of Ethereum relative to Bitcoin, as indicated by the ETH-BTC trading pair, also shows signs of weakness, with ETH facing rejection from a long-standing descending trendline. Bitcoin's market dominance is also at a critical juncture. A break below the trendline on the Bitcoin dominance chart could signal a significant shift in market dynamics, potentially leading to a scenario where Bitcoin strengthens while altcoins experience sharp pullbacks. Historically, Bitcoin tends to lead bull runs, with altcoins following suit once Bitcoin stabilizes. However, current data shows some divergence, with Ethereum and other altcoins exhibiting signs of waning momentum. Analysts are closely observing this trend, as a shift in Bitcoin dominance could trigger widespread volatility across the altcoin market. In summary, the market remains in a state of flux as Bitcoin tests crucial support levels. While some analysts interpret the current breakdown as a potential fakeout, others warn of a looming deeper correction. Prudence is advised, with investors encouraged to monitor key technical indicators and price levels for further clarity. The coming weeks will be pivotal in determining Bitcoin's trajectory. So, is it time to brace for impact, or is this a golden opportunity? Next, we're looking at a prediction that could change everything. Could Bitcoin really hit $1 million? Why Eric Trump thinks Bitcoin will hit $1 million. Eric Trump, a prominent figure in the business world and the son of former U.S. President Donald Trump, has expressed a strong conviction that Bitcoin is destined to reach a staggering price of $1 million. During a recent fireside chat at the Bitcoin Asia conference in Hong Kong, Trump shared his bullish outlook on the leading cryptocurrency, making bold price predictions and encouraging listeners to consider investing now. "There's no question in my mind that Bitcoin hits $1 million," Trump stated during his conversation with David Bailey, CEO of Nakamoto Holdings. He further elaborated, suggesting that the price could potentially surpass this milestone, commenting, "And by the way, I don't think it has to stop there. I think it could go a lot higher." Trump's thesis for a $1 million Bitcoin is grounded in what he perceives as a straightforward economic principle: the intersection of increasing demand for a scarce asset. He articulated this viewpoint by stating, "You have every person who wants an asset class, and you have a very limited supply. It doesn't take a genius to figure out where that goes." Beyond the fundamental supply and demand dynamics, Trump highlighted the growing utility and integration of Bitcoin into the broader financial ecosystem as a key driver for its appreciation. He pointed to the recent surge in companies acquiring Bitcoin for their corporate treasuries and the unprecedented demand witnessed by spot Bitcoin ETFs since their U.S. launch in early 2024. Furthermore, he noted the continuous expansion of the Bitcoin financial services sector. "It was digital gold. It was a store of value," Trump remarked, adding, "Every single day they're figuring out new ways to kind of stake it, to get yield on it, to use it for everyday purchases. You're taking this digital gold that was really just a store of value before, and you're putting massive utility behind Bitcoin." Trump's enthusiastic endorsement of Bitcoin is not surprising, given his deep involvement in the cryptocurrency industry, which he claims occupies 90% of his time. His professional affiliations are closely tied to the crypto space. He is connected to Trump Media, the parent company of Truth Social, which has secured $2.5 billion in funding earmarked for Bitcoin acquisition and has also applied for its own spot Bitcoin and Ethereum ETFs. Additionally, Eric Trump serves as the co-founder of American Bitcoin, a Bitcoin mining company slated for a public offering in September. He is also a key figure behind the decentralized finance, DeFi platform World Liberty Financial, which has received promotion from President Trump himself. This is not the first time Trump has publicly advised on cryptocurrency investments. In February, he recommended his ex-followers consider adding Ethereum to their portfolios, shortly before its price experienced an 18% decline. Despite the short-term dip, Ethereum has since recovered significantly, surpassing its previous all-time high and making those who invested at the time of his recommendation profitable. However, ETH has seen a downturn since reaching its recent peak. Trump is now extending a similar buy signal for Bitcoin, addressing concerns from individuals who question whether they have missed the opportunity to invest in cryptocurrency. He stated, "I hear from people all the time, 'Should I get in a cryptocurrency? Did I miss it? Am I too late?' And I literally start laughing at them." He emphasized the nascent stage of Bitcoin's development, asserting, "We haven't even scratched the surface of what Bitcoin is going to be. This is the time to buy." Volatility is your friend. Buy right now, shut your eyes, hold it for the next 5 years, and you're going to do terrifically well. Could this bold prediction be the catalyst for the next major bull run? Stay tuned as we wrap up with a rapid-fire recap of today's biggest stories. And that's a wrap on today's essential updates. We saw Bitcoin facing potential resistance, El Salvador making moves to secure its digital assets against future threats, and a major prediction about Bitcoin hitting $1 million. Don't miss out on any of the action. Make sure you're subscribed, hit that notification bell, smash that like button, and follow us on all our social channels for more real-time insights. We'll see you in the next one.